Hello and good morning, everyone. Good morning, and I just had a issue with some technical issues, but we are back again, back live. So let's restart again, and welcome you. Good morning, everyone, to another episode of Inspired Entrepreneur, where we dive deep into real estate trends, investment strategies, and personal development. I'm your host, Greg Piskuzub, and today we have an incredible episode lined up, reflecting on the recent seminars from the National Landlord Investment Show and some of the experts in the property world. Will be unpacking the thoughts of Adam Jones from the Leaders Roman Group, Gavin Richardson from MFB, the Team CJ Hall, local estate agent from Bristol, and Paul Shamplina from My Deposits. These experts have shared their perspective on everything from ever-changing regulations to market trends. And today I'm here to unpack all for you, all the insights to make you a better informed decision in 2024. Let's kick off with Adam Jones Marla, who spoke in details about the complexities, of property in licensing in Bristol. But these regulations not only adhering to a Bristol local investment market, but also a national, broader area. So he has highlighted how ever-evolving licensing schemes is like Article 4 and selective licensing are making, compliance an absolute minefield, for landlords. Bristol now has one of the largest licensing schemes in southwest of England, but navigating it can be quite difficult and tricky. So here is some details for what you really need to pay attention to, because these are being overlooked by a lot of people accordingly to Adam. Fire protection and waste management for tenants. So we recently completed a project, and we've been waiting for additional bins, and it's been administration challenging. Something as simple as having the bins delivered on time. It's sometimes it actually is challenging because you're talking to other people, and the amount of emails we send back and forth, and we've been waiting 3 weeks. And if we wouldn't chase it, so as much as we did, possibly would take even 6 weeks. So it was challenging to manage a 6-bedroom HMO with only a small family provision of bins. So that was very challenging. And fire protection. It is very important to understand, what's required for a fire protection system for rental property, and depending what size of the rental property and type it is, because there will be a different regulations. It could be like for HMOs, an interlinked smoked alarms and heat alarm in the kitchen. You need to understand if this is to D1, LD2, level of protection. So all of this could be quite complicated. You need to understand if they need to be interlinked and also have a battery, but not a normal battery. It will be a 10-year sealed battery that needs to be in the alarms. So all of that is very, very important, and you need to understand before you actually do, as this will be a part of your licensing to make sure that you will receive a license, because there's a difference between having a planning permission for your project, but also getting a license. Two different things. You have to be super aware of all of these. Potential consequences of not knowing, these requirements, such as, investing in a wrong property. And it could cost you, money in fines. So requirements to provide a comprehensive inventory and condition statements, and you need to have this signed by your tenants, or you need to be able to prove that you have delivered those information to your tenants, because ultimately you are responsible for safety at your property. And if something happened to one of your tenant or tenants at the property, you will need to be able to show and prove and document that you have delivered those information. And if you haven't got a system in place, it will be a very difficult, because it's going to be your words against other people's words. You don't want to be in that position, trust me. As well as gas safety and energy performance certificates, these have been quite obvious requirements for years and years. So you need to understand that your annual requirements for your gas safety checks needs to be provided. You need to provide actual copy of the tenants, and to the council as well. But what we do in our properties, we've got this big, massive notice board, and we've got like a notice board standard. So it's a template for all our investments, and that's where all of the information is. It's all visible for anyone who comes and audit the property, for any new tenants that will move in. All of the information, starting from the safety certificates, and also, with very important Wi-Fi password. We don't want tenants to be going into into all of the routers and dangling, just messing about with the cables and everything. So the big one, in the big letters, there's a Wi-Fi password, which is making absolutely clear for everyone. That's not the requirements, but from experience, that's definitely on my notice board. Similar requirements for EPC, which it's been proposed that the minimum EPC standard has to be a C rating, but that's been pushed back. But anyway, if you are in the game of property investing, you want to make sure that your properties are invested for a long term. It's the long game that you're playing. It's not a get rich quick scheme. So you're investing for a long period, and you do want to make sure that your properties are adhering to as high energy rating as only possible, because this is your investment anyway. So you want to have a good running business, and that's how you should treat your property investing, as a business, because ultimately it is. But I'll talk about that more in just a few moments. So advice to landlords is to keep the evidence, of providing these certificates to tenants. That's very important. Importance of being, and that's one, fit and proper person for managing a licensed property. So what is a fit and proper person? Are you a fit and proper person to manage your property? So what's the definition? The council has to ensure that those responsible for operating the license and managing the HMO are of sufficient integrity and good character, and to be involved in management of particular residential premises to which the application related, and as such as they do not pose a risk to health, safety, or welfare of persons occupying and visiting the HMO. So, are you a fit and proper person? Exactly. It's a good question. Give us a like in the comments if you think you are. Application process and penalties for non-compliance to these regulations are actually quite high. So steps involving applying for a license, including like preparing certificates and using the council's online application system, which could just make it easy for you. Or you can just ask other people, like who, professionals who've done this before, could help you, or could even do it for you. I'm sure not for free. There will be a charge for this, but there's so many regulations and so many compliance that you need to make sure you adhere to get your license. Otherwise, it will just extend the whole process. You can pay fines, and the whole process, it could be absolutely nightmare for you. And I don't want to be there. You wouldn't want to be there. Fines can reach up to 30,000, per breach of a licensing procedures, or even, or conditions, or even criminal, penalties, like unlimited fines under the criminal side of the legislation. So if you are seriously breaching the license, the largest fine in the UK was over £80,000 for a landlord with multiple breaches. And so imagine £80,000. That's a lot of money to be paid. And but it is. The landlord was found guilty, and he was seriously breaching the health and safety and the welfare of the tenants, and he was fined £80,000. Rent repayment orders. So tenants can apply to have up to 12 months rent returned to them if the property is found to be non-compliant. So if you're out there and you're thinking about your property, your investment, your accidental landlord, you've got a property that you've inherited, or your parents gave you a property for whatever reason, and you're unsure whether you're fully compliant or not, you don't want to be risking to be sued by your tenants if they find out that you're non-compliant. And with the new regulations coming, where you will be asked to be registered on the national register, when the awareness for the tenants will be greater, and if they would understand that they can actually prosecute you for last 12 months of the paid rent, then you don't want to risk that, do you? So make sure you're fully compliant and flag those holes, put those smoke alarms up, and just make sure that everything is in tickety-boom order. And if you don't know what to do, well, feel free to reach out. And there are many meetings and many networking events in your area, regardless where you are in the UK or in the world. There are so many out there. I'm a part of the PIN, the Developers Network. I've got my own networking events, which we're now going to start in online events. So if you would like to find out more information, give us a like and leave the comments below, and I'll get back to you to tell you more about this. So where were we? So Adam's advice: always ensure you have right planning permission and licensing before converting a property to a HMO or any other use in that matter. With councils getting stricter and possibility of a heavy fines or even prohibition order, where the council will tell you that you no longer are fit and proper person to even manage or have the HMOs or the investment properties, it's crucial for landlords to stay informed and compliant. And I'm also touched on practicalities of handling inspection and maintaining documentation. So tips, what you can do are very essential for ever-changing, regulatory environment. So you have to stay on top of everything. Sometimes it might be easier to actually hand your properties over to a managing agent. This could be an easiest and definitely stress-free to have the property and invest in the property if you get someone else to actually manage with all of that ever-changing regulations to make sure that you're compliant and staying on top. So understanding compliance, it's one part of equation, but what about a bigger picture? How about the economy and impact on the property market? So that's where Gavin Richardson insight come into play. Gavin Richardson was the second speaker I attended his seminar, his presentation. And so Gavin Richardson from MFB gave us a powerful analysis of the current economic landscape and the implications for property investors. He explained how rising interest rates and turbulent market conditions have affected mortgage products, making it more challenging for landlords to finance their properties. And this spike in rates, combined with changing stress tests, means for landlords that the investment must be more strategic than ever. With refinancing and expanding your portfolio, you really have to know what you're doing to make sure that it's still profitable when you finish converting your property, when you finish your your refurbishment, and you need to understand that this is a long game, as I mentioned before. Some key facts from this presentation is mortgage markets is so 6,000 buy-to-let products were withdrawn and replaced with within a month with about 2 years ago. So what it was is just before we were due to be hit with the increased interest rates. 6,000 buy-to-let products were, withdrawn and replaced. So that's how many people reacted quickly to the changing market. And regardless, even if they had to pay the ERC, early repayment charge, it was still a good deal to pay your fine, break the contract, your fixed term mortgage, pay the fine, and secure it for as long as you could, so for 5 years, to still make a most of that lower interest rate. And so we know that 6,000 of them have been replaced. I remember that time, it was crazy busy. If you wanted to speak to your finance broker, it was almost impossible. Some of them worked till midnight to make sure the applications have been submitted and it will be liable for the lower interest rates. 90% of buy-to-let mortgages are below 75% loan to value, while 90% of residential mortgages are above 85% loan to value. So what that means is that the buy-to-let mortgages are being paid off. So people are actually paying them off. So that's less than 75% loan to value, while the personal mortgages, the residential, the ones that you live in, majority of people are actually above the 85%. So that's a very interesting, key here. So it means that the property investors actually paying the property off, while the residential mortgages are, being maximized. So you have to really be careful where you spend your money and what property you're buying. In Bristol, he showed some metrics about Bristol. So let me give you a rental market. So average rent property outside London, this is outside of London, is £1,436 a month. So just over 1,400 a month. And in Bristol, an average rent for the same type property is just below 1,400. It's 1,389 a month. So that's quite interesting. As there isn't such a huge difference. It's actually less than £50 difference. So if you're thinking of investing in Southwest, Bristol might be your area. There are 15 to 22 tenants looking at every property, on the market in Bristol, 15 to 22. So if you're looking for a high demand area, this will be one of those. The entry point investing in Bristol will be much higher than the one that is further up north. But again, you need to know why you're in this game, what you're doing. You need to know your numbers, and you need to understand why you're getting into this local market. There's one interesting fact I want to inject here, so that might help you when you make your decision. If you're investing down south, when you're able to get about £900 per room, this is a high-end room, good standards, above the average, good communal area space, dining room. So we're talking about really, really high-end properties. And I'm talking about HMOs, where you're able to get £900 per room, bills included. And even more in some cases. So let's say you've got, 6-bedroom HMO, you're getting over, just about £5,000 a month, and your boiler breaks down. And equally, you have the same property up in north, where you get £500 to £600 a room, and the same boiler scenario, your boiler breaks down. if you're up in north and you have to replace the same boiler, the price of the boiler will be about the same. The cost of installation might be slightly more expensive down the south than in north. But if you think about, if you have to replace the boiler, it's going to be 2, 3, 4, 5,000 pounds. And if you're up in the north, that will put you out of your pocket for a couple of months. As in down the south, it may put you out for a month, or not even that, because your rent, actually you're collecting a lot of rent, so that will cover. So there is that aspect that that you can think of when you're investing and what is your area. But again, if you're going in and you're refurbishing property, please do check how old is the boiler, and just make sure that you know what you're doing, because you definitely don't want to be in that scenario where the property is fully tenanted and now you have to replace your boiler, because that will really stress your budget at that moment in time, which will not be planned for unless it is. So let's get back to Gavin's presentation. And so property prices in 2007, it was 25 to 40% cheaper to rent than to take out the mortgage. So how crazy. Currently, it is still cheaper to rent than to take out the mortgage for the first-time buyers, because if they rent a property for less than 1,400 a month, if they went to buy the same property, it actually it will cost them more in the mortgage to either pay the mortgage rather than rent. But again, it's the chicken and egg situation. I want to get on the ladder and I want to have my property. I don't want to pay someone else's mortgage and live in the property. So this is like, you have to choose what's right for you, where you are in your life. And if this is your first property, maybe renting for a short period of time, saving money for deposit and buy your first residential mortgage, you have to really be careful. But so 2-year fixed rates have come down, and the gap between a 2-year and a 5-year fixed rates has quite narrowed. So where we used to see a greater difference between 2 and 5-year fixed rate mortgages, now that gap is quite small. And what the lenders are doing is they're introducing the actual product fee, which you have to be super focused on understanding and work with your broker here, because they know what they're doing. So you need to understand, when you add all of the fees and product fee to your mortgage, which it could be like, 4.7%, which sounds good in current situation today. End of September, as I'm recording this. But if they're going to throw in a 5% product fee, that's no longer really good. But on the other hand, if you've got 5.25 or 5 or more, but you've got 2 or 3% product fee, actually both mortgages may work out exactly the same. So you need to make that decision of what is the most important for you at this time, and what's the strategy that you have with this particular property. Is it something that you're going to just turn it over the next 3, 4, 5 years? Is it something you're going to hold? Is it something you want to sell, make some money and sell in the near future? So you need to make that decision before you buy property. Work with your broker to understand that this number will work for you and what is the right product. Very crucial. The average 5-year fixed rate currently is about 5.5%. But Adam here thinks that the interest rates will obviously come down in the next year or two, and but the money will never be as cheap as they used to be, 3, 4, 5 years ago. These times, I don't think they will not come in my lifetime. So this is normal now. This is how much money we will pay now, to borrow money, basically. And this is what we have to keep in mind. Bridging finance usage has increased by 44% in the last 2 years. So a lot more investor. Well, I'm also guilty or not guilty, but I also use a bridging finance. Quite expensive money, but that's what we needed to do on that particular property investment. But it's crazy how much it has risen, because the cost of the bridging finance in compared to actually mortgage, it's not as much now these days. So the traditional mortgages, buy-to-let mortgages, the interest rates came up, but the bridging lenders, their cost of borrowing money haven't really gone that much higher over the last 2 years of this crazy spike in interest mortgage. So really shop on the market to make sure that you're getting a really good deal, and you can take into account different benefits of working with the bridge lender and working with the buy-to-let product, having access to some additional finance, development finance, and working. If you know which lender you can work with, it could be to your advantage. We did have a presentation from Roma Finance, and I'll be inviting them to actually maybe come on this podcast and give that presentation themselves. I'd like that, so you can actually learn how working with a good lender could really transform your investment. Let's get back to Adam. So Adam also shared with us that Middlesbrough is currently the highest yielding property investment area. So again, second tip, if you're looking for your gold mine area, I mentioned Bristol and Middlesbrough. So look into it. Adam painted like a vivid picture of the situation. Landlords coming off the 2-year fixed deals, from rates of 3% are now looking at 5% or more. This change is pushing many to raise rents, but with the tenants also feeling the pinch from the cost of living crisis. It's a delicate balancing act. So Gavin's message was clear. Now is the time to review your portfolio. Consider incorporating properties into limited companies to mitigate tax impacts, and work with your tax advisor, with your finance advisor here. I'm not giving a legal advice, I'm just sharing from my perspective. But understanding what to do with your property investment and how to structure, you could really maximize your tax liability. And keep an eye on potential capital gains and tax changes that could hit you unexpectedly. And that's from Gavin. So with all these changes in financing and regulation, how should investors approach the Bristol market, specifically? For that, we're going to turn into a CJ Hall team. So this is a little bit about, if you're thinking about, if you're local, if you know me, I invest in Bristol, and I'm going to share this with you, and what the CJ Hall team, shared some very optimistic news about Bristol's property market. So despite the legislative challenges, they see great opportunities, particularly around the new university campus development in Temple Meads areas. With student housing demand expected to surge, investing in purpose-built student accommodations, or HMOs, in strategic locations could be a very lucrative. But you need to know where exactly. So stay tuned. Planning, which is in Bristol, and I believe I speak for the greater nation. It's been a challenge. It always has been, and the new government proposing that this will be handled more effectively. Do we believe that? Longer planning timelines are a factor to be aware of when considering your development, because it can cost you in your time, and time is obviously money. So you need to know what you're doing, and this is a crucial aspect of before you start. investing before you buy this property. Know your numbers and know the requirements that needs to be achieved when you go for a planning. Whether this is a permitted development order, PD rights, or full planning permission, or any other, in fact, planning permissions that you would require for your property. You need to understand that planning is different from licensing. So if you're gonna get a planning permission for a 6-bedroom HMO, you're not automatically going to get the licensing. So be careful about that. This is a common mistake people do when they're new to this investment, or not even new, when they've done it for, I know a few people in my network, when they've done it for a few years and they still make this schoolboy error mistakes. We all get caught out on these little things, because if we're busy doing other businesses and the property is just a side hustle, this is it. You need to decide if and how much focus you got and education you're going to give to your property journey. The new campus in Bristol. So there is expected to be a lot of development around the university campus that comes to Bristol in Temple Meads. And in 2021, there was an introduction of Article 4 area, which is now covering a majority of Bristol. And so people, HMO and developments, student purpose built, houses were moved further, north from Bristol into Filton area, and where this area is now quite oversaturated with the HMOs concentration. With this year, the January the 8th, I believe so, the introduction of Article 4 in Filton came in. And now, majority of Filton is now, swamped by Article 4 area. And I believe, same as CG Hall shared, that this article is only going to expand. So now is the time to invest, secure your property, because if and when will be then covered by the Article 4 area, and you buy the property and secure your planning before the Article 4 kicks in within that area, your property automatically gains in value, because now you've obtained permitted development rights for your property while it wasn't in the Article 4 area. Now that property is in the Article 4 area, and you will have to now gain a full planning permission, which is longer and more stressful and not given automatically, that you're going to get. So that's how you can maximize that opportunity. Knowing what developments are in your area where you live and invest is very important. Licensing compliance. So additional licensing and selective licensing requirements are crucial for landlords, with the penalties for non-compliance, which I mentioned before. Where Adam was sharing about the fines that we can face, and if we are not compliant with the licenses. They've also shared the financing challenges as well. So increased cost of borrowing money has been a barrier to entry, for some investors that's looking to finance HMO. So knowing who to work with and how you borrow your money, what strategy are you going to use? What are you going to use OPM, other people's money? What are you going to go for a breach finance or leverage a buy-to-let mortgage? And knowing how to crunch those numbers, working with the good brokers would be the key. So they've also shared a very important aspect of purposely built student accommodation. 6 and 7 bedroom HMOs, may be of a less demand, and smaller properties have been getting greater, traction, and more they're more looked after. So getting a group of 6 and 7 students these days is not as cool as it used to be in the, in the years ago, where I think the awareness of young people these days is like, I actually do want to gain some education, the access to media, the access to to being aware of what's happening within a greater world because of the social media is far more than it used to be, and that approach to building your own future, your success, having been living in a bigger shared accommodation, it's not the great. I don't think that's where the trend is going, and actually we can see that as a result. Some of my investment friends, they struggle to fill those larger HMOs, 6, 7, 8 bedrooms, 9 bedroom HMOs. But there is one key aspect. If your property is run down, a big old HMO, you will struggle. But if your property is high-end HMO, high-end product, you will have no issue filling your rooms, even if there's a 50 or 22 bedroom HMO, which one of my colleague from Miss Yato Developments, I've seen their project early this year. It was the trip organized by James Adams from Developers Network, and we went to see the latest project. It's all now finished, fully tenanted. It was a great project, amazing spaces, big rooms, and this is what I'm talking about. Is if you're doing your project to a high standard, you will have no issue filling the rooms. You will have no issue with the demand, because there's a 15 to 22 people looking at every property in Bristol, but they're looking for a good living standards. So despite the trend is now for smaller properties, but this is where we're talking about the properties that are 6, 7, 8 bedrooms. I know another friend of mine just finished developing a HMO in Filton, which is now Article 4 area, and he's done 7-bedroom HMO, and I went to see it. It was beautiful. It was almost like a hotel. And Richard, absolutely amazing property. Well done to you. And we've learned about 2 weeks ago, it's fully tenanted. Obviously, no brainer. While the other people are struggling to fill their rooms because maybe they need updating. So ask yourself, how recent in terms of refurbishment is your property? Does it need refurbishing? Do it, and you will forever be enjoying full demand on your property. And what CJ Hall teams, they have emphasized the importance of staying ahead of planning constraints and being flexible in investing strategies. Bristol market is still quite robust, and the areas like East Bristol are on the rise, presenting lower entry points. So you will need to spend less money to invest in any particular house, property, flats. But they've also suggested that investors should consider diversifying, whether this means like looking at semi-commercial properties or even social housing. There's something for everyone in Bristol. So look into Bristol market if this is where you would like to consider your next investment. Feel free to ask any questions and give us a thumbs up if you like this. But what about the legal complexities and the future of renting? Paul Shamplina from My Deposit wrapped up the discussion of a deep dive into landlord-tenant relations and renters' rights bill. He heavily worked on the renters' reform bill, but Paul Shamplina is known for his work with Landlord Action and My Deposits. He delivered a compelling session on how the renters' reform bill will reshape this year, but actually renters' rights bill was just introduced, a few weeks ago. He explained that, with the abolition of Section 21, landlords will need to navigate, even more complex eviction process under the Section 8. This will require landlords to have really well documented grounds and evidence in possession claims. So it's not going to be as easy to get back your property because you will really need to be able to document what's the reason for you getting someone. I know it's your home, but this is ultimately someone else's home because they're now living in it, and that's what it is. I believe it's good. It's good in some respect, because if I'm buying a property, I need to know why I'm buying the property for. So again, if you're getting into a property investing, you need to understand that when you buy this property, it's not a get-rich-quick scheme. I repeat myself, but that's important because people do make that mistake. And you want to understand who is your tenant before you buy this property. So who are you doing the property for? Then you will understand what is the lifespan on that property being used by that tenant. Whether this is a single family with a young child and you've got a small 3-bedroom house, then obviously if the child will grow, they might stay in your property for 5, 6, 7, 10 years, maybe more. But if that family will be then looking into maybe getting their own first property, so they will become a first-time buyer eventually. So the tenancy lifespan might be of 5 to 10 years. If you got student purpose build accommodation, then obviously you've got yearly cycles that's completely different from family buy-to-lets. If you got HMOs, and these are for young professionals, then you need to understand what age bracket they are, because they might be the life cycle of that rent may be 2, 3, 5 years, and not yearly cycle, not 5 to 10 years like a family. So you need to understand what you're getting yourself into, because it's going to be harder to get your property back if you need it for whatever reason. And if you need to sell property, you might need to consider selling property with the tenants in situ. So when you have those tenants and you really run down the property, your rents are quite low, lower than below average market rent, then you will struggle to sell that property, and you will have to take a huge discount to sell that property, because anyone else who's going to go and invest into that property, they will now need to evidence why they want to bring the rents back into the market average. And they will need to go and invest money into bringing the property up to a current standards, or in many cases above the standards, if that's how you do it, and that's how I encourage you to do. Paul also mentioned about the eviction and court system. So last year there was 31,000 eviction possession claims, the highest since 2016. 31,000 eviction claims, eviction possession claims. And according to Paul, this year is expected there will be 60 to 70,000 Section 8 eviction cases. So you can see how huge this is. It's going to double. It's going to double, and that's what it is, because people understand that this is where they're going, and at this moment they got like a wake up call. Okay, do I still need this property with ever changing regulations, with what's coming to the market? They might not want to be the landlord anymore, because it's not going to be as easy. If the property is really tired and it needs some work, they don't want to be landlords anymore. They want to really exit that market, because it's no longer a vanilla buy-to-let. It's no longer just a back burner money maker. It isn't. So that might contribute to 60 to 70,000 cases. Delays in the court system that Paul shared with us, with one landlord being told they would get an eviction date in January 2025 for an application made in July 23. crazy, absolutely mind-blowing. Uh, you see why landlords might want to exit the market, because they might not be able to get hold of the property and get back control of the property if they are not on top of the regulations. So it is crazy. And also, what he shared with us on the day is obviously it's been proposed that the deposits will become periodic, and this is introduced with a new renters' right bill. So you really need to understand how you select your tenant. So the process of selection of tenants is crucial. But with the new renters' right bill, when you select, you can't discriminate the tenants as well. So I've talked about this last week. So it's very important how you're going to choose your tenant, because you cannot discriminate someone being on on government support, so DHS. You can't discriminate people who wants to have pets. So you really need to understand what's coming, what is the fine print of these regulations, to know and understand how you can navigate, how you can protect yourself, what terms and conditions you have to implement into your contract. And again, the change Paul mentioned is the contracts, the ASTs, assured short hold tenancy contracts we have in place now. According to Paul, this will be replaced, and as we usually have 3 months implementation period, this could become overnight a change. So stay tuned to this podcast, listen out to what's happening, because we will inform you when that change is coming and what that change looks like. So Paul's message to landlord: stay calm. May not be easy, but do stay calm and don't panic. He stresses the importance of building strong relationship with good tenants, as long-term, reliable renters will be more valuable than ever before. He's also advised landlords to prepare for the new upcoming decent home standards and potential changes to the the EPC, Energy Performance Certificate rating, which will likely require significant investment to many to meet the new criteria by 2025. But here we are today, and there was a lot of information, and 2024 will be a year of both the challenges and opportunities. For one person's challenge is for another person's opportunity. So for property investors, from all the changes in regulations and economic shifts to evolving market trends, staying informed and adaptable to the key is success. Is the key to success. I hope today's episode has equipped you with some valuable insight to navigate the road ahead. Thanks for tuning in into the Inspired Entrepreneur. And if you enjoyed today's discussion, don't forget to hit subscribe and leave a review. Until the next time, keep investing smart and stay inspired. Thanks for watching.